Hey guys, give me 1 second. Sorry, I had to just a couple meetings had to wrap up. Hold on real quick. You know when you get coffee and it is you get it and it's hot, and by the time you drink it, it's not. That's the kind of that's how my morning has been. It's like, oh man, the coffee's not even hot anymore. And I even put it on a warmer. At least it's not cold. I guess that's another that's the good thing. Anyway, happy Tuesday to you guys. It's actually a pretty quiet day, but we're seeing a little bit of retracements. Whew. Sorry, every once in a while, and I wish I could put my finger on why this happens, but every once in a while I try to sleep and I can't fall asleep. I'm usually, it's like, I can put a number on it, probably 90%, 95% of the time. I'm one of those people that I shut my eyes and I'm out immediately. Like, and my wife hates me for it. She's more of an insomniac, me, I close my eyes and I'm out. But there's that less than 5% of the time that, and I don't know why. I try to figure it out and I can't figure it out. But like last night, I could not fall asleep. It took me like 2 hours, and when you normally get 6 and then you get 2 or 4, then it's, weighs on you the next day. But I can't put my finger on it. I can't, it's not like I was, eating or drinking coffee late or, or eating, sugars or something. I don't know why. And Alex said, just normally when you're too tired to go to get some sleep. No, it happens to me when I'm too tired. And maybe that's it. I don't know. But anyway, I wish I could put my finger on it. I think I sit there and I think about it like, why is it, not, and I'm a pretty, what's the proper term? I'm a pretty regimented person, so I don't do things differently on a day-to-day basis, that really could, it's not like, oh, I ate this weird thing, or, ooh, I drank this weird, substance. It's nothing like that. Anyway, I don't know. Doesn't matter. What matters is the markets. And right now it's summertime. And so if you guys catch me like randomly talking about stuff, that happens a lot during August, and you're going to, especially if you're a newer member of ForexAnalytix, and you're going to catch me talking about random crap in the month of December, because those are usually the slowest months. August and December, it's like the end of summer when no one's around, like right now, or, between the Thanksgiving and Christmas holiday, even though, you may be thinking, well, I'm not a Christian, or I don't celebrate those holidays. It doesn't matter. The rest of the market does. So it tends to be kind of quiet, especially if you get towards, mid-December, it's really quiet. So, if you catch me talking about random things this time of year, just understand it's, because there's not a lot to talk about. So some of us might call it a filler, but I'll tell you what is happening though, is the dollar is firm, and, precious metals are still a little, well, they're weak. Crypto is not really doing much. I think, sorry, I'm going to yawn randomly and sporadically today. I can't help it. One of the other things that I think we should be paying attention to is the talk about government, the U.S. government running out of funds, and I think that's a topic of conversation I got to start doing a little bit more research about. I think we might end up with a shutdown. I don't know if it's really going to affect risk appetite all that much, but maybe it will, because we're at such elevated levels. But anyway, as you guys can see, let's start with the euro. I mean, how important is this support right here? I would venture to guess really important. Now, if you take Okay. This is the March 2020 lows to the highs of this year, beginning of January. Remember, the best trade of 2021 was short dollars, long euro. Every bank. Okay. We are at the lows of 2021. And you guys have heard me say this. I'm really, really wanting to see a move lower towards the low teens. Now, what's really important about that 2020 low to the high is look where we're at right now. This is the 38% retracement. Do you think that 38% retracement has mattered to the market in the past? Hell's yes. It mattered in March, and it's going to matter now. That's why it is so vitally important that we're watching this 117 level. So let's just, and you could write, oh, Blake, but it's 116.90. I don't care what you write. Actually, I just want you to write that it's important. Okay. Whenever you get to important support or resistance, we can get within 20 or 30 pips of this level and bounce. And you could ask me, Blake, did we respect that? And I'll tell you, yes, we respected it. So just, it's not like an exact number. It is basically around 117. We're around 117. Like I was saying on the F.A.C.E webinar this morning, I don't want to be the guy just shorting the euro right here at 117.20. I don't want to be that guy that gets caught short is what I'm trying to say. I don't know if it's time to be long, but I sure as hell don't want to press the button aggressively right now, knowing that we're at key support. Do I feel that we are at risk, high risk of breaking 117? Yes, I do. And I especially feel that way while we're trading below, not that previous support, not here. Oops, shoot. Sorry. I grabbed the wrong thing. Not this previous support. It's this high right here that I'm more worried about. 117.70. While we're below 117.70, we have to stay bearish. Okay. We get above 117.70, it's going to be squeeze city. And this is the level that I say, okay, let's get long euro. Okay, because then I know we pivoted off a long-term 38% retracement. We have a double bottom and possibly in play, false breakdown. I'll get long above 117.70. Matter of fact, here, add alert. Blake, get long. Right? There you go. Lorraine says, oh God, not the blue light special coming up. Oh, you don't want to tell me the blue light special story. All right, here's a sterling. Flag support comes in a little bit below that 38% retracement, but you guys know 138.30 is big support. And we could realistically go all the way down to 138.20, but let's say we break that. Let's say the euro breaks 117. Well, 137.80 is next. So I'm going to write that down. Oops. 137.80. Resistance. $139. Here's the Aussie. Now, I know I said it a lot last week, but I'm going to reiterate this every day that I've said really for the last 2 weeks. While we're below 74.20, not time to be bullish. I know it bounces overnight, but every time it bounces, it gives you an opportunity to sell into strength, right? Even yesterday we traded up here to 73.62, and it was a perfect opportunity to short into the strength, right? So support is going to be 70. I'm just going to write 72.90 because that's really key now. Now we shouldn't make it above yesterday's high, so 73.60 should hold as resistance. Obviously 74.20. That's key. And as long as that holds, you have to stay bearish. Kiwi. 618 retracement right here, horizontal support. First level support is 69.50. So it's 69.50. And today, I mean, even if we get a push up towards 70.35, that should cap us. And beyond that, 71 cents. We are in a range right now. Dollar CAD, quiet as a mouse. Obviously right here is resistance. So I'm going to write down 136.10. And that's going to be key for now. We're still range bound. I'm not convinced that we're going higher yet. But usually when I'm not convinced of something is when it happens. So, you know, this still could be a head and shoulder pattern. Could be. Intraday, 125.25, but I'm going to write down support as being 124.75 intraday. That's it. Intraday. Dollar Swiss. This has been a hell of a rally. I mean, that's a squeeze. Like that's just a massive squeeze, right? Oh, Raj says, Blake, you put 136 for looming. Oh, sorry. Thank you. Thank you. Thank you. Thanks, Raj. I'm like, I'm yawning and my eyes are watering right now, and it's 6:30 in the morning. That's not a good sign. I'm telling you, I hate it when that happens to me, when I just don't get good sleep for no reason. There's like no reason whatsoever. Anyway, so intraday, notice we're above the 78% retracement. Notice that we're challenging some resistance here. So intraday, I'm thinking, okay, any dip back down to this level should be pretty well supported. So this is channel resistance, should act as support, previous resistance right there. It's going to come in around 91.60. I'm going to write down resistances up here, 92.75. So yeah, that, I mean, that I know I have it as range, or had it as range, but man, that's a pretty bullish, that's a pretty big squeeze. I mean, caught me off guard. I did not expect that move to happen. Did not. US dollar, Norwegian krona, still bullish. Look at how we're just holding gains. Imagine you're shorting US dollar, Norwegian krona right now. You're probably thinking, holy crap, what am I shorting that for? Right? I mean, 885 is support, resistance 890. We had did we write down 895 yesterday? 895. I mean, I know we went as high as 896.20. Man, I have to say that's a pretty good call, right? But here's the thing. We break above 196.50. So I'm going to adjust this a little bit. 896.5. We get above that, we should revisit the spike high, which will be 910. Whoops, shoot, I did not mean to write that. 870, 885. I'm going to remove some zeros really quick just to, okay. This is bullish. Dollar Mex. I mean, dollar Mexican peso is holding up pretty damn well. We're well above 20. So 20 to now remember, this is the where are we at right now? You guys should know this. 200-day moving average, right? We are at the 200-day moving average right now. So just if you run out and say, oh, I want to buy the dollar Mexican peso because we're going up to 2025. I'm going to buy Salma. We call her Salma in the chat room. If you guys aren't in the chat room, Salma for Salma Hayek. Did I tell you I watched Desperado with my son the other day? I mean, Salma Hayek's a beautiful woman, but holy cow, I forgot how pretty she was until I, rewatched Desperado, how pretty she was in her, younger years. She's still beautiful now, but holy cow. You forget because you just don't, it's been a year since I've seen that movie. Whew, boy. Anyway, we call her Salma.
That's it. I'm watching it tonight.
Oh, are you? You should. I'm telling you. It didn't age as well. I mean, I forgot how cheesy how cheesy the action sequences are.
Tarantino, man. You expected, right?
It's not a Tarantino movie.
Is it not?
No.
Oh, sorry. From Dusk Till Dawn. I was talking about From Dusk Till Dawn, man.
Yeah, but no. But it's a Robert Rodriguez movie.
Yeah. Yep.
Anyway, but Tarantino's in the movie.
Yeah. Yeah, he plays that small role, doesn't he? Yeah.
Yeah, yes, he does.
That's cool.
It is. It's cool. All right, 2025. But like I said, I forgot, just you see her in, current day and you realize, oh, she's still pretty, but you forget how pretty she really is or was in her youth until you see that movie and you're like, wow, she was just so beautiful.
Yeah.
And she's aged well too.
Was being the key word.
No, she's aged well. She has.
Yeah. Okay.
Let's not go into that with Steve in the conversation. Okay, let's carry on.
Steve. Yeah. Okay. Let's not. 110.60. Next resistance is 111, but remember, we are at the 618 right now. So 110.60, 111. I'm going to keep it in range. And like I wrote down yesterday, 109.80 should offer support. So, any dip down to 109.85. Dollar index. I mean, dollar index looks bullish. I mean, look at this. We're trying. I mean, I have to write it that it's bullish. 93.20, then 93.60. And while we're above 92.70, we have to be bullish here. Gold just destroying longs. I mean, like I said on the FACE webinar, it's pretty apparent to me yesterday when just all the people, I mean, random people from all over the world I know they're all over the world because when they write to me, they barely can type in English. You know what I mean? And I'm just like, would you buy gold here? What do you think of long gold? You know, it's like, yeah, those are the tweets of desperation of people buying gold in this dip, and they're losing money. And now they're trying to get opinions from everybody who they view as has some sort of status or professional or whatever it is. Does it make sense? I mean, that's all it was. It just spoke desperation to me. 1750. While we're below 1750, we're bearish. And I don't even know what to write. I mean, I can write 1780 or 1680, excuse me. I don't think that's I mean, this is a really good support level. I just don't think we're going to get down there today. Silver. While we're below 24, we have to stay bearish for 22.35. 22.35. Bearish while below 24. Whoops. 4. Bitcoin, unbelievable. This thing really strong. 48,300 while we're above 42,500. So, gosh dang it. I keep clicking on that down on my toolbar and it doesn't pop up. So bullish while we're above 42,500, and S&P. You guys already know the numbers, but we'll have to, if not, we'll jog your memory. While we're above 43.75. Oops, 43.75. We have to stay bullish. None of these numbers have changed. 44.40, which is the 127% extension, keeps capping us. If we get above that, then we go to 44.95. And, you know, possibly even 5,000, but this is all still valid, all valid. Right? So. Okay, done. So, Steve, Stelios.
Bueller.
Celio.
Yeah. As I told you guys, I'm so tired. I don't know what happened, but I just like most nights I just shut my eyes and I'm just out. And I didn't eat. I actually ate fairly late, but that's usually not the case. Usually it's, you know, I've tried eating late, eating early, seeing if that makes a difference. I ate kind of late, but I didn't have any sugar. So usually if I have sugar too late, it keeps me out. I don't know what happened. I just sat there and said, wow,
you are getting old. That's what's happening.
No, usually when I'm old, I just fall asleep on my desk. I'll just sit here and just start snoring. Just kidding. Anyway, I'm going to let you guys go. Have a great one. Lorraine, if you're lucky enough, I'll talk about the blue light special during the daily roundup. All right, guys, have a great one. Talk to you soon.
Thank you, Blake.
Somebody is saying you got a COVID.
Yeah, no, he doesn't. Okay.
Thankfully, he doesn't. Yes.
Yes, not yet. So what have we got? Markets opened, equities are unchanged. Nothing will bring them down, that's for sure. And yields, what are yields doing? Creeping a little bit higher, but nothing I mean, bonds are actually interesting. I've been saying for
Yields are
ages.
at the precipice of breaking out from this rectangle stage that we've been talking about.
Yeah. But overall, if you ignore that little, how do you say, this venture below, it's they've been in this channel. It's been relatively controlled, and we have to break above that for me to take
Yeah.
a look.
Agreed.
Bonds are interesting because bonds are trading very, very well. And I remember I've been saying I want to see, I mean, this correction is very, very small. And I've been saying I want to see 178 to start shorting them. We didn't get there, close, but didn't get there. Now with the hawkish Fed, bonds are also kind of following.
Although that was a big reversal on
It was
on Friday, and we haven't fully retraced it yet. So in my opinion, there is a big chance that we're going to see some follow through before bridging.
Yeah,
at
there
least
is. There is, absolutely. I never said there isn't, but I'm just saying that they're trading relatively well.
Oh yeah. All bonds are still doing amazingly well. I mean, considering, the fundamental backdrop, right?
Yeah, absolutely. And what else is there to talk about? We talked about a lot of things on F.A.C.E. One thing we didn't talk about is cryptos, and they've been very resilient. They bounced hard from that false breakdown. Bitcoin, if you remember, broke below 30,000. Everybody was looking at that level, myself included, obviously. Broke down just a little bit below. I think it went to like 29.5. I just screamed higher afterwards. And the interesting thing is that cryptos don't seem to care about developments in, for example, we have in Joe Biden's package, the infrastructure program, there is they talk about taxing, regulating cryptos. They're talking about a crypto tax reporting rule that's going to be introduced. So there are things that are changing slowly, and some
for
of
the
these,
time being, they seem to look elsewhere.
Yeah, and cryptos are just don't care, which it just shows the strength at the moment. But for me, the more governments start to look at them and looking to regulate them, and of course they want to tax them. I mean, governments want to tax everything.
Everything.
Anything that moves, anything that gets sold or has value, they want their share. So
Absolutely.
I don't see how people think they're going to avoid that. But maybe they will, maybe they won't, but I don't see governments ever.
I think they won't, but you know how it is. This is a very sentiment-driven market.
Yes.
And there is a huge chance that it won't pay attention or care until it suddenly does, because, reality is like a train. At some point, if you're on the train line, you're going to be hit by it. Either you like it or not, either you believe in it or not.
Yeah. And it's, and cryptos are just very strong. And I'm seeing a lot of people saying and posting, and oh my God, why are you not in cryptos? They're the future. Gold and silver, it's just, 1,000 years ago, forget about that. And I get scared when I hear things like that. So we'll see how they pan out. But for the moment, they are strong. People are making money off them.
True, very true. Bitcoin has broken out of this rectangle, which is a bullish development. It's currently testing the 50% fib of the move lower. I'm not convinced at all yet that we're done with the downside. In my opinion, we are probably in a more complex correction. And the fact that people are so fast to get their spirits back up, thinking that, okay, next move to, let's say, 100K has begun, is making me even more worried that probably that's the outcome, that these people will first need to be taken out before the market can more freely actually move to the upside for a more sustained type of bullish move once again. Ethereum, same deal, even at a bigger extent, currently testing this horizontal support resistance area at 3150, just below the 61.8%. But for the time being, yes, they act very bullishly. They have very healthy momentum behind them. So it's definitely not easy to fade them.
Of course not. Yeah. Otherwise, not seeing really much, and I fear that now we're just setting up for another grind until Jackson Hole. So the market is going from one event to the next event.
Yeah, unfortunately, it's very likely. And of course, what isn't helping at all is the summer lack of liquidity, other than the obvious factor that we have going on for the last 12, 13 years, which is the central banks, in essence, making their best effort not to allow any volatility to persist for more than 2-3 days at a time.
Yeah.
So yeah, the market is holding up on all aspects. Any type of asset that is a risk asset is holding up remarkably well, unquestionably. And once again, we have this concurrent move higher in the dollar and in risk assets. But as I've said a few weeks ago, for me, this has now become more of risk assets just not caring at all about what the dollar and yields are doing. So for the time being, risk assets seem to have been completely decoupled and uncorrelated to any of their usual correlations, because you see that you have this situation in which risk assets remain either range bound near the highs or hitting all-time highs, irrespective of if the dollar is moving lower, if the dollar is consolidating, or if the dollar is actually moving higher, which is a weird situation, but it is what it is, right? So, yeah. Now, having to do with technical developments, we've had a few. I spoke yesterday about, and we spoke at the end of last week as well, about USD yen breaking higher from this channel. And I do think that it is a very, very likely scenario that this is a legitimate move, especially seeing the US 10-year yield knocking on the door of that rectangle we showed at the beginning for a possible bullish breakout. We also have had this breakdown in the euro. We've been talking about this possible symmetrical triangle, and yesterday we did close below it, and today we do seem to be pushing below it once again, and we're currently testing the confluence of the previous low, this one that we had back at the end of March, with the 38.2% fib. So this is like a key level. In my opinion, we break through this as well, then the chances that we're not moving lower towards the next objective, which is roughly at 115, are rather limited. And of course, since at a big extent it's the inverse type of scenario, we are seeing the DXY breaking above the equivalent symmetrical triangle, obviously in the opposite direction, right? In this case, to the upside, which opens the door for the next upside move in the DXY, which, as we've said some time ago, that would be 94.50 to 95. Several resistances reside in that 50 pip range, and I do think we are most likely than not on our way to that area. So these are on the FX world probably the most interesting technical developments that we have, and they do point to further appreciation of the dollar in the short term. As I've been saying some time ago, for me that changes nothing. I always believe there is a chance that we'll see this rebound extend higher, but in any case, I think we're still within a corrective type of rebound for the dollar. So I'm just waiting patiently to see when we actually find a tradable high that will give us good entry points to be short the dollar again against probably several FX pairs, even assets, right? Now, we talked about yesterday's candlesticks in gold and silver that could even be the indication of some tradable low. Especially, we talked about the possibility of, which I said it wasn't easy at all, but if we did manage to pull a complete reversal intraday and close unchanged or even positive on the day, that would have been an amazing signal. We didn't. We did end up closing a very decent distance away from the lows, but definitely not the type of candlestick that makes you say, "Oh my God, this is probably a big reversal." This type of price action, like the big dump, and the market then not caring and retracing the move has indicated that we have some tradable low. So we didn't get that type of a candlestick in either of the two yesterday. That doesn't mean that this scenario is out of the window, right? It doesn't, because it's not just the candlesticks, it's the fact that here in the case of gold, we did test the previous lows, we did test this descending channel trend line support, and we rebounded from there. In the case of silver, we did spike through this key formation, and then we retraced and closed back within it. So yeah, it's not unlikely that that was a tradable low, but the type of candlesticks we got definitely don't produce the kind of confidence that I would want to have from a candlestick to feel, a lot more comfortable with, buying, right? So there is a chance that we haven't bottomed yet. I mean, there is a decent chance in the short term, obviously, always, because as I've said, none of that changes my medium to long term bias, because they're based on very, very solid fundamental thesis and ideas. Now, platinum did manage to produce that type of a candlestick, although the size of the candlestick has nothing to do in comparison with the gold and silver. So, and we're seeing some positive follow through today also, which isn't the case in gold and silver. Gold and silver today are again negative, not dramatically, of course. I mean, like 1/4%, 1/3% is not like that big of a deal. But in any case, platinum seems to be behaving better here. Let's see if we're going to confirm this RSI divergence. If we actually trend higher from there, this is quite significant RSI divergence to ignore. Copper, in my opinion, remains bullish until proven otherwise. Nickel, more of a mixed bag here. And we've talked about palladium. Palladium still remains within this bigger symmetrical triangle. So, this is going to be an interesting trade, in my opinion. There's a very good chance we're going to see very volatile type of trading once again, once we see a breakout from this. Now, I know we have people here that are going to immediately ask about natural gas, and I have nothing to add to what I've been saying all these days. Natural gas remains extremely well bid. We still have a series of higher lows. At some point, we're going to get a deeper corrective move, but I think it remains very, very bullish until proven otherwise. And even when we get a deeper pullback, I think that's going to be an opportunity to be long once again, as is the case with crude oil, which did turn lower some time ago, but in my opinion still, by the way, yesterday crude oil didn't even manage to break below this symmetrical triangle, right? Which is one of the two possible scenarios. The other scenario is the scenario of a channel. So we did get that spike lower, but we did not close below this triangle. So even the triangle remains a possibility in this case, and we're seeing a nice reaction higher today so far. Now, last but not least, before I go in answering questions, I wanted to show the crosses, because we didn't do that yesterday. Just to remind you that my medium to long-term bias are lower for all of those. I like the fact that Euro got rejected once again from this channel trend line resistance. You can clearly see that the type of price action we've had on the way up has nothing to do with an impulse. I mean, the type of momentum you want in an impulsive move or whatever is absolutely not there. We just have choppy overlapping type of recovery, which is even worse in the case of Euro Kiwi, right? Because Euro Kiwi, while Euro Aussie hesitantly and with a lot of effort has managed to at least produce some incrementally higher highs again and again. In the case of the Euro Kiwi, we didn't even have that. Euro Kiwi keeps banging its head on this confluence of resistances at 170.50 and is now on the precipice of a breakdown from this channel. So in my opinion, Euro Kiwi looks like a very, very good candidate for a breakdown and an acceleration lower. So Euro Aussie, nice rejection, but still not breaking down. Euro Kiwi on the precipice of breaking down. Now you'll notice I'm going to start from Pound Kiwi in this case. I have a good reason for it. Pound Kiwi resembling Euro Aussie, more or less, right? Not having broken down, not even on support as we speak, but in my opinion, it's a matter of time for this thing to break down as well. You'll notice that Pound Aussie is the exception here, right? Because Pound Aussie among the four of them is the only one that actually did manage to break above the, in my opinion, most likely corrective channel. So the question is here, are the three others lying or Pound Aussie? My bias is that probably the Pound Aussie is lying here and it has produced a false break higher. But clearly time will tell, right? I still monitoring them very closely, obviously. And you do know that if we continue in a risk-on environment, these pairs are eventually doomed to break down. I mean, there is absolutely no way that remaining in a risk-on environment, these pairs can hope to do more than at best consolidating or, remaining in this very, very slow, unimpressive grind higher. Eventually, though, as long as we remain in a risk-on environment, these pairs will end up breaking lower and probably then picking up in momentum to the downside. John says stock markets on the move, all news. Yeah, stock markets, I mean, as I've said before, it's amazing how stock markets seem like they have completely decoupled from anything else. It's like they are isolated markets on a different planet that seem to completely disregard anything that has to do with economies, central banks, yields, FX. I mean, any type of usual correlation has gone out of the window. They just seem to be following their own tune, if that's the expression, if I remember right. And, it is what it is. And it's extremely hard, despite all the divergences we're seeing and, the obvious mispricing that exists at the moment. It is extremely hard to take the decision to fade this, right? Extremely hard. Especially in the middle of the summer, right? And as long as volatility is just getting, killed on a daily basis. Speaking of volatility, you'll notice that another divergence, because I said before, there are several divergences. Like we see one in VIX as we speak. I mean, we do see that we're trading at a higher low, right? So we don't have a lower low despite indices having produced a higher high. But these divergences in the VIX can persist for a very decent period of time. So on its own, the RSI divergences, the VIX divergences, the overbought conditions in the RSI, the DSI, so in essence the sentiment indicators that point that the market is very bullish, none of them are a timely indicator to be short, right? They are showing us that yes, we're moving towards some kind of a sharp corrective move lower because all these conditions will have to be reset at some point. But how do you know that the market is not going to move another 10% higher even during this slow grind before this can play out? So yeah, that's what makes it extremely hard to short these markets. Steve, do you think breakout for ARK? Also same for ARKG. Let's have a look. Yeah, we might. We might have a breakout here in the short term. But I'm not convinced that the pullback is over. And you see the clear divergence between ARK and the Nasdaq, for example, right? Or the S&P, right? So we've seemed to have entered the period of underperformance here, and that would make me very, very skeptical with ARK at the moment. And I'm not sure, it's a little bit of a complex correction. I can read it both ways. I'm not sure we're done moving lower, right? I'm not sure at all. So I would be very, very careful being ARK here. I can tell you that much. In the very short term, we probably have some kind of a bullish breakout here, but even momentum is really lacking, right? So yeah, I wouldn't be buying it. I can tell you that much. Not here, not with what I see. I would stay on the sides with it. Is oil cause the burst of CAD strength? Listen, the Canadian has an okay correlation with crude oil. Used to be much better, clearly. But I don't think you should trade it based on crude oil, right? Now, if we remain in this type of environment, sooner rather than later, the commodity currency complex will have to overperform the dollar, right? And for various other reasons, actually, right? So I do think that this big move lower that we've had since the high is the new, quote unquote, new trend. And I do think that this move higher is the counter trend move, which might not be over yet, right? And the exact same thing applies to the USD NOK. The exact same thing. The exact same thing, right? I'm not sure this corrective cycle higher is over. It might not be, but I'm pretty much convinced that this is a corrective move unfolding to the upside and not an impulsive move. I can tell you that much. Oh, I forgot to have a look at ARKG because you asked about that as well. So here is ARKG, and the last time we had a look at it, we had several looks at it, as it seems in the past. Pay attention to this trend line resistance. As you see, for the time being, it's holding. In the short term, definitely that's going to be a bullish development, breaking through that, right? And the 200 DMA, which is more or less the same area, right? So 89, you can be short against 89 because the risk reward is very appealing. But I think we break through 89, you shouldn't be short, as simple as that. And you have every legitimate reason to want to trade a bullish breakout above 89, right? My pleasure, mate. NVIDIA. NVIDIA. Yeah, what can I tell you about NVIDIA? Wait a second. Did they do some kind of a split? Because that's the only time. Yes, okay, that explains why all the technical analysis here has gone bananas, right? Yeah, that explains it. I hate this. God damn it, I hate it when they do this. Because you have to redraw everything. I didn't actually see that. Probably I was on vacations or something. I didn't see that. I didn't read it or whatever. But that explains this. And I remember different levels. Okay. So, NVIDIA. First of all, there is no question that it remains in a very bullish trend. Having said that, I know that we're not at higher highs, right? We haven't produced a higher high, but look at this amazing RSI divergence. I mean, we are so close to a higher high, it's more than obvious that if and when we produce one, which is very likely to be honest, the RSI divergence is going to be, eye-glaring, right? And that's one thing to notice here, right? We've been in a massive, massive uptrend for a big period of time, which, as I've explained, has fundamental backing to it. But everything is up to a point. I think Nvidia is priced into perfection and priced in with all the supply shortages being in mind. But supply shortages have the tendency of being resolved because price itself is the best method via which you solve price shortages, right? Because what happens when you have supply shortages for any number of reasons, because you can have supply shortages for any number of reasons. You can have supply shortages because the supply has been limited for disasters or whatever other reason. You can have supply shortages because something happens and suddenly demand explodes higher at levels you wouldn't expect in advance that you could see or you could see happening so soon. You can have it because of a combination of the two, which COVID was in some extent a combination of the two aforementioned ones, having to do with technology companies and companies that produce hardware that is used in any type of computer device, right? So and by the way, having to do with Nvidia, I've said it before, AMD is extremely fast closing in the gap of performance, as it did with Intel. When it completely destroyed Intel, it caught up to Intel that was far ahead, caught up to it and surpassed it. Now it's attempting to do the same with Nvidia, having to do with graphic cards, and it seems to be successful because the latest series of graphics cards and AMD is now incrementally lower in performance from Nvidia and already somewhat better, slightly better than Nvidia, having to do with price paid per performance unit, right? And if the rumors are true about the next generation of graphics card coming out in a few months from now, it seems that AMD has a very decent chance of surpassing that in speed. Add to that the fact that Intel, that is trying to make up for some of the loss of market share in CPUs, is actively entering the graphics card universe as well. And it seems to be doing a decent job. So that's going to dilute the market share of Nvidia. I mean, obviously, right? You have a new player entering the graphics card market that had been exclusively a duopoly so far. And until like a couple of years ago, a duopoly with one of the two players being far ahead than the other. And within the last 2 years, you've had the second player in the duopoly becoming almost as strong as the first one, and the third player entering the market. So, in my opinion, within the next few months, we're going to see a big sell-off coming in Nvidia at some point. When the bullish arguments run out and supply shortages start getting resolved, I think that is going to be the catalyst for a big move lower in Nvidia. Now, I know a lot of useless information for many of you, but I'm just giving you the fundamental backdrop why I would not be chasing Nvidia up here, right? Because I think the potential upside to the potential downside coming, at least as a very healthy corrective move in this one-sided market, is asymmetrical, right? That's what I think. I think that at some point we're going to have a very, very big and deep corrective move in Nvidia price. But for the time being, you have to respect the upside, and you have to look for upside targets extending the previous pullback and look towards 217 and 227 as the next upside targets. Watch out, as I said, though, we have this RSI divergence as well, and we are getting closer to earnings. Perhaps even earnings can be the catalyst for a turn lower, or it can be the catalyst for another explosive move higher that might prove to be very, very short-lived. So perhaps the last bullish type of move to the upside can happen post earnings before the price starts deflating to the downside. So basically, my stance, if I was a stock analyst, would currently have shifted to neutral in NVIDIA with big hesitation for following higher. Low. Let's see. What's this? Whatever it is, seems to be doing pretty well. Although we are currently in some kind of a corrective move, right? So short term, I can't say that you have any reason to be bullish, right? But I do think that we're probably still in an uptrend, right? But short term, I don't see any indication why you would want to buy it now here. Is this a ticker, or you just agreed with me? This one. Amira, is this the yes you want to look at? No. Okay. Was yes just an agreement, or was it another type of ticker? I see why. Now I'm really confused. No, yes. Okay,
bro. No worries.
Make up your mind. I'm going to move to the next one. SMH. SMH seem to have been breaking out, but still, still no momentum. Let's see if it holds above this trend line resistance, then yeah, look higher, right? But I don't like this slow grind higher. RSI yet to manage to hit over both levels. Yeah. This remains a bullish market, but it just doesn't have the strength to actually push higher. I think I would be, if I was long, I wouldn't be closing my long positions, right? But I would be monitoring closely, you know what I mean? But would I be buying it? Nah, I think that are things that are looking better at the moment. For example, this one, you want to look at FSLR, right? It looks better than the previous one, right? The move after we found the low here seems to have more momentum, for example. RSI seems to be breaking out as well. So for example, this looks better than the previous one as a breakout trade, right? Already produced a higher high as well. So yeah, doesn't look magnificent, but it looks a lot better. So this might be on its way to new highs. SEDG. Yeah, this looks good. This one looks good. This one looks good. Broke out from the first channel, broke out from the second one, gapped higher on earnings. Yeah, this looks good. I think it's on its way to the previous highs. No reason to be bearish here. Okay. Anyone else? Anything else before we call it a day? NVAX. Yeah, this one turned higher once again post the gap lower that we had with earnings, and it's testing the rectangle trend line resistance once again. Listen, this looks like a beach ball, right? It looks rather resilient. It looks well bid. I think there is a very good chance that it's going to break through the rectangle. Once it does that, as we said yesterday, the next upside target is at 295, right? So it breaks higher, look towards 295, and probably if we make it there, then look towards new highs. I think it looks, pretty decent, bullish chart. We had a proper corrective move lower. We've had a breakout. We're now about to have another breakout. If we do, I see no reason why you would remain skeptical about it. Last but not least, yield. Nothing to add here. What do you see on the chart? Right, still coiling within this triangle. A break in either direction should produce follow through. Right, in one case towards the 200 daily moving average at 64.60. In the other case to new highs. I mean, new this cycle type of highs. Right, look towards 74 or so. Next. Okay, guys and gals. Don't forget to join Blake in 2 hours and 10 minutes from now.
Thank you, Steve.
And
Thank
see
you,
you
everybody.
again tomorrow. Bye bye, Stella.
Thanks, guys.